Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, 5th day of August, 2019, and this is the Daily Report for Gold and Silver. Tremendous volatility in the financial markets overall, with U.S. equities plummeting with the Dow trading at its low over 900 points lower and closing just shy of 800 points lower, about 767 points in terms of its decline, and the precious metals taking off with a surge to the upside. This all began on Thursday of last week when Trump sent out a series of tweets announcing that he would impose an additional 10% tariffs on the remaining $300 billion worth of Chinese exports into the United States. That prompted some real volatility in the market on Friday, and yesterday as well as today we had the Chinese yuan going to one of the lowest points against the dollar in history. That sent the market just cascading to lower pricing, and it took gold to return to its safe haven asset demeanor. And that's what we're witnessing here. We did put on a trade earlier today. I attempted to buy some sort of dip. We're in about $1 below where current pricing is. We'll talk about that, our stop, as well as our upside target when we pull up our technical studies. But first, let's take a look at current pricing. Traders, a tremendous upside swing in precious metals with gold gaining about $18.20. We are looking at the most active December futures contract, currently less than $25 away from $1,500 at $1475.70. We had the dollar swinging tremendously lower today. It was higher in terms of against the yuan, but the yuan isn't in the dollar index. So the dollar down about 0.5% at 97.34. Platinum gaining ground up about 0.7%, 858.70. Palladium also trading higher on the day, a gain of $12.80 at 14.17, still well below gold. And then finally silver, a nice gain at $16.40.5. Traders, let's take a look at our charts. Tremendous upside move in precious metals, gold gaining about 1.25% on the day, 1475.70. That's our current print, and you can see with this daily candlestick chart the fact that it traded well above any former level of resistance and moved to new highs. We haven't seen the market trading at this point since April of 2013. Of course, this is in response to a series of tweets that began this whole thing back on Thursday, in which President Trump announced his plans to initiate additional tariffs on the remaining $300 billion worth of Chinese imports into the United States, beginning at 10% and initiating these on September 1st of this year. He's also stated that that's the beginning. If there's no resolution, those tariffs could be raised to about 25%. That sent the financial markets reeling in the United States as well as overseas. The Dow plummeting and gold showing some real signs of trading as a safe haven asset, really for the first time in quite some time. My current initial target is going to be over 1,500. 1,507 is actually the number that I'm looking at. And right now we're only about, $35 or so away from that. We did recommend initiating a long position. We are in at approximately $1 below this price point. And I really have to pull up some short-term studies to show you what I was thinking as we put that trade on. So let's go ahead and take a look at a short-term chart. We are looking at a 10-minute candlestick chart. This is in standard candlestick format. I also want to take a look at this in Henkinashi because we use that type of chart to determine strength or weakness in a particular trend. But we can see that we had a couple of dips in the market. I didn't react on the first dip, but I was waiting for another dip to occur to see if it would come in deeper. It did not. We had the market begin to sell off, actually trading to a low of approximately 1472. And as this market, and this was fast market conditions, trading back up, that is what's prompted the buy signal. I was trying to position ourselves because I do believe that this market is moving higher. However, in terms of a stop, what we did is we put it below the low of 3 days. And for that, we really want to look at a daily chart so you can see what we're referring to. And I'll go ahead and convert that right here. If we do, and we look at these lows that came in, you can see this low 3 days ago came in at 14.1230. Now, I do not plan on having this kind of a risk in our current trade, and if we do come under pressure, I would quickly move that stop up to the market. I do not want volatility, intraday volatility, to take us away from a trade that I think will be profitable because we are not accounting for the volatile range that it's trading in. My recommendation is to maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.